Hey there, future homeowners. Welcome back to our Homebuyer series. Today, we're diving into a crucial aspect of the mortgage process that can be one of the most important milestones in this whole journey, the appraisal. I'm Lisa Pinnock with Lisa Does Loans and the Mortgage Dream Team with UFFC Express. If you're gearing up to buy a home, understanding how the appraisal works can be a game changer. So let's break it down. We're going to talk about what it is, why it's important, and how it fits into the mortgage process. First, let's review where we are in the mortgage process. You've been pre-qualified, you've submitted your docs, and you found the house. You went into contract, and the contract has been accepted. Our team immediately went to work vetting your contract, requesting anything from you that needs to be updated, and we sent out disclosures for you to sign. Now that you've signed those disclosures and documents, we're officially on day one, order outs. Last week we talked about ordering title and the title process. Our next step is ordering the appraisal. That's what we are talking about today. Next week we'll talk about insurance, taxes, and some other things that happen. So let's just get into it. First things first. What exactly is an appraisal? The appraisal is the evaluation of the property on behalf of the lender. When you apply for a mortgage, your lender needs to ensure that the property you're buying is worth the amount you're borrowing. That's called valuation. And the appraisal also certifies that the subject property meets all the regulations of the loan program that is being used. Let's start at the very beginning. Making the appraisal order. Once you've signed your purchase contract and the disclosures, that authorizes us to start the process on your behalf. That is when we get moving on those orders. Title takes the longest, so we order that first. The next order is the appraisal. First, we will gather your payment information. The appraisal is the only item in most cases that we will need to have paid up front. Our team doesn't charge an application fee. We don't request a credit fee up front either, like some places do. In fact, we don't even charge our clients for credit at all. But we are required to collect the payment information for the appraisal up front. We can take your information by phone, or you can fill out a form. In some cases, you can be reimbursed for the appraisal charges, so it's important that you pay for the appraisal from the same bank account that you are using for your closing costs, that your closing costs are coming from. So we're able to source that later. When we have the payment info, we order the type of appraisal that is required. Loan types and property types have specific criteria and regulations that they must meet by the appraiser. So when we order the appraisal, we're also ordering based on the subject property and the loan program that you'll be using. Now that the order is in, the appraiser can be assigned and accept the order and payment. When the order is accepted, a due date is given, usually within 10 to 15 days. The due date is when we should expect the completed report. But before the report is written up, first the appraiser has to physically go to the property and do a thorough inspection. The appraiser will contact the listing agent, that's the real estate agent that works for the seller, to coordinate when they can access that property for the inspection. They coordinate the inspection date with the seller if the property is occupied and the agent's schedule if they are meeting them there. It's important to know buyers are not allowed to attend the appraisal. We will tell you when it's happening so you're informed, but the buyer is not allowed to actually participate in most cases, as that can be a conflict for the appraiser. I'm asked that question often, so I thought I would mention it here. When the date of the inspection comes, the appraiser will visit the property, conduct a thorough inspection, and they'll document features and materials used throughout the home. They'll take lots of pictures and make copious notes. They'll look at the quality of the construction and maintenance. They'll measure square footage, look in crawl spaces and attics, and depending on the loan type and type of appraisal, they'll go down a checklist of items to make sure that this property meets all the criteria for safety, solid building, and firm foundation. After gathering all the necessary data, they'll compile their findings into a detailed report. When the appraiser returns back to their office, they take all that data, the photos, the notes, and begin putting together the appraisal report. They look up records for the property and assess everything from the home's condition, features, materials used, to its location, comparable sales in the area. From time to time, the inspection can come the very next day, but it could take a week, depending on how difficult it is for the appraiser to find the necessary comps and property history and records that they need. Now, here's the million-dollar question. How does the appraisal affect your loan? Well, it plays a significant role in determining whether underwriting will approve your mortgage and how much we are able to lend. Let's go over some scenarios together. If the appraised value comes in lower than the purchase price, when this happens, it can often depend on just how much lower it is. Many times, your realtor can negotiate the purchase price and other contract terms to offset it. If it's a huge difference, though, it could potentially derail the transaction if the sellers are not willing to lower the price or meet you in the middle. This doesn't happen often, and there are certain situations where we can appeal if it does. But if this does happen to you, we'll go over the options that you have, and so will your realtor. If the appraised value comes in higher than the purchase price, that is the ideal and what everyone hopes for. When you are getting a home that is valued higher than what you are paying for it, that means you have instant equity in the home and you've gotten a great deal. In certain situations, you can apply that equity to cover closing costs, but even on loan types that don't allow it, you know that you're starting as a homeowner with an asset that's already carrying a positive balance. As stated earlier, the appraisal doesn't just give the value of the home, but it also certifies that the conditions meet the requirements of the loan program. Different loan programs have different requirements. Conventional loans are the most forgiving. FHA and USDA are the same inspection but done on different forms, and VA has its own separate processing guidelines altogether. Investment properties and certain property types like condos, apartments, multifamily units, etc. will carry their own requirements too. So the goal, besides bringing a high value, is the appraiser stating that the value is given as is. When we read the appraisal report, the first thing we look for is the dollar sign. The next item we look for is that coveted as is designation. What happens if we don't get as is? When this happens, it's not the end of the world. It just means that the appraiser is giving us some conditions that we need to meet before we can earn that valuation that was documented. When an appraisal isn't as is, then it's subject to, and that can mean repairs, further inspections, or whatever the appraiser has designated in the report. And they give us details and photos of what items need to be remedied. Repairs. These can be things that the seller needs to complete or repair. It could be hazards or safety issues that were found, or it could be repair items that contribute negatively to the home's value. The appraiser doesn't look for cosmetic items ever. They are looking for items that are unsafe or that can contribute to instability in the home. For example, if they see missing siding or chipped paint on the exterior of a home, they may ask for that to be repaired. That is because the missing siding exposes the structure to the elements. They will require it to be covered so that there's not rot or erosion, but they don't care if it's a beautiful color or if it's a hideous mismatched color or material. Another example, if there are shingles missing from the roof, this exposes the roof to the elements. The appraiser will ask if this repair is done before giving a clear report. Things like missing handrails on steep stairs, electronic or gas-related safety issues may also be found in the report that are subject to in repair. And of course, any issues with the home's foundation or stability will always be mentioned. Sometimes with items like those, another type of inspection could be required. The appraiser may ask for a structural engineer to come give an opinion, or have the well or septic guy come inspect so that it's inspected by a professional in that area. If your appraisal returns subject to, don't worry. Our team and your realtor will help you through navigating any necessary repairs. What if you're the seller? There are things you can do to ensure a smooth appraisal process. First off, make sure the property is in tip-top shape before the appraiser arrives. Address any maintenance issues and spruce up the curb appeal. Additionally, provide the appraiser with any relevant information about upgrades or renovations that you've made to the home. Know how old the roof is? Make sure your listing agent knows this information so that they can inform the appraiser. If you're the seller, your realtor will be invaluable to you in this process to know what the appraiser is looking for. Let's look at the process and go over it once more to review. On day one, after you've signed disclosures, we're ordering title and your appraisal. We collect your payment info. The appraiser gives us a due date and then negotiates the inspection date with the seller's side of the transaction, listing agent. The appraiser inspects the property and takes photos and notes for their report. The appraiser makes a report and turns it into our team. When we receive the report, we vet it for the most important information, value, as is or needed repairs. Then we review for any pertinent information needed in the transaction. We'll review it with you as the client and provide you a copy. And we update the realtors on both sides that the appraisal is back, value is or is not acceptable, and if there are any needed repairs. Then we apply the value and details to the transaction and submit to underwriting, of course. Any items needed by other parties we'll share as required. For example, roof or property details we might share with insurance to help you get a better rate. And there you have it, folks. The ins and outs of the appraisal process in the mortgage journey. Next week, we're going to look at escrow and prepaids. In short, we'll be talking about insurance, property taxes, and some of the items that make up your closing costs. So this is one of those that you don't want to miss. Remember, knowledge is power, especially when it comes to buying a home. If you found this video helpful, be sure to give it a thumbs up and subscribe for more of our tips and insights. Please share this video with anyone who might be interested. Until next time, happy house hunting, and remember, the Mortgage Dream Team is here for you throughout every step of this mortgage process, and it all begins with a conversation.